everyone, and thank you for joining us at the FBAA Landscape in Focus series for 2020. This is our first eSummit for 2020. Today is also National Sorry Day, a day of healing. This day we also remember the stolen generation and the part of the reconciliation journey. These have been really challenging times, so it's really important that we continue to support each other. It's also really important that we can continue to provide you with the industry updates. So, like many of you, we also have gone digital. So let's get things underway. Firstly, for attending today, you'll all receive 1 CPD point. So just make sure you check your email afterwards. I'd also like to thank all our national sponsors. So as you'd be aware, without the support from our sponsors, these events simply cannot take place. So please make sure you also download the contact details, which you can find in a PDF format from the Go webinar. At the FBAA, like you, we love referrals. So if you refer a member to us, you'll also receive 10% discount off your next renewal for your membership. So thank you. Now, most of you would have probably already downloaded the FBAA app. It's a great app. It's where you can keep informed, particularly around an up-and-coming webinars that we host. Now, also remember, if it's been a while since you visited our website, if you go to the members area, there's a really great resource area in there, which you'll find a lot of useful tools as well. Some may be aware that we've actually recently launched our broker support program. Now, this is a web-based program. Please ensure that you visit and you can find some really useful information, particularly around measures today and the environment that we are in with COVID-19. You'll also find the agenda for today on the Go webinar as well. So it's now my pleasure to introduce our first sponsor, Angela Gillett, who will be speaking to you around loan protection, good for clients and good for business. Welcome, Angela, and over to you.
Good morning, and thank you, Christine. Look, a little bit about ALI, which has led us to become the leading provider of loan protection. In 2019, we commissioned an independent NPS survey to authorised brokers as well as policyholders. Both results were high, and we particularly rated high and impressive to Core Data's own Simon Eldwick. And he commented, a score of 79.7% is one of the highest scores they've seen in the third-party space. So these scores highlight that ALI policyholders and brokers highly value the product and the service that's being provided. So when we completed this survey, we reached out to brokers as well as policyholders. I'll just share the screen, apologies. So over this period, we've protected over 200,000 clients and paid out $60 million in commissions. Our mission at ALI is to protect Australian home and property buyers from financial hardship, and this lies in the very core of what we do. It is really important that we make loan protection a conversation synonymous with mortgages, the same as buying a car and setting up compulsory third-party insurance. As a broker, your responsibility goes beyond helping the client to find the right loan. It's also to make sure that your client understands the risks so they can decide how to best protect themselves. There are a few different risk solutions today, and I will focus on loan protection. Clients can be protected throughout the loan process, and this is a valuable time to review the cover without having to pay a cent. This slide here will show some of the main reasons why it is important to have this conversation. However, currently, with the third bubble of involuntary unemployment there, this is a cover that will change as part of our policy changes throughout the next month. So if you are currently an authorised broker with us, please ensure that you read the emails coming through and the product training that will be available to you as of next week. Otherwise, you will no longer have access to the portal and to be able to quote your customers. For any brokers who are considering becoming authorised with us, we can continue this dialogue once the new product is up and running by the 1st of July. So let's talk about when it comes to financial advice. There's a huge gap that is not being offered to your customers. Australians have had an attitude that when it comes to insurances, a lot of them won't pay for advice. And in a recent Zurich study, it found that 30% of respondents were not willing to pay a fee to receive life insurance advice, while only 8% of consumers were willing to pay more than $1,000 to see a financial advisor. 4% of Australians between the ages of 20 and 35 will seek financial advice and are looking to mortgage brokers for the expert process throughout that. So if you're talking to first home buyers and customers who want to refinance their existing home loan, they're probably the right ones to discuss loan protection with. As you grow their wealth or they consider purchasing investment properties or their sophistication around their financial needs change, a financial advisor would be perfect for them. However, there is that gap where you can have that discussion. Corporate superannuation does not have trauma cover, whereas ALI, we do cover trauma, and obviously with the financial advice, they will have that too. With nearly 60% of residential home loans selected by mortgage brokers, this is a sizable chunk of the population, and you can be a big part of that change. Underinsurance is quite a large problem here in Australia. As an authorised broker, you have the opportunity at the gaps that stand out. We do have a number of claims that we pay, and we share those claims with you on a quarterly basis. What you can see is nobody is immune to suffering job loss, as we've currently seen with COVID-19. We've since paid out a number of claims with the involuntary unemployment piece that is still part of the product. What we do know, 1 in 2 men and 1 in 3 women will be diagnosed with cancer in their lifetime. An Australian will suffer from a stroke every 10 minutes. And this is a scary thing according to the latest Roy Morgan single course survey. There are 1.9 million mortgage holders who don't have any existing protection, which goes to show the gap again. So every conversation that you're having with your customers, you can be open to educating them with what their options are around their insurance needs. Along with your opportunity to discuss insurance with your customer, there is also a commission to be paid. There are 2 types of commissions that we do offer to our mortgage brokers. There is a hybrid model, which is a 45% upfront and a 10% trail, and this will change with the new product. There is also what's called a level structure, which is a 17.5% ongoing trail-like payment. So there is no clawback on that second part. Our typical policy holders last for 7 years, so you can see that it is a generous payment throughout the life of the policy. As you continue to grow your customer's wealth, you can also increase that policy as they borrow more to give them the additional cover they may require. If you are interested, or if you're an existing authorised broker, you can certainly submit expression of interest with us to become an authorised broker or refresher training. And again, with the new product that is being launched, the opportunity for the refresher training is most definitely there. There is myself, who looks after the majority of the Queensland coastline as a BDM. We also have Michael Messenger and Kirsty White, who's recently joined us. Then you can complete an application form, and then as your BDM, we will help you implement the process as part of your offering. Christine, thank you, and thank you to all the members who have taken the time to listen to this pitch today. I assume our contact details are on there, so feel free to reach out at any stage. Thank you.
Great, thanks, Angela. So what we'll do now is we're now going to hear from WAMC and Pepper and how they can also assist you.
Conducted by our experienced industry trainers to make learning interactive and enjoyable. These classes are not webinars, so you have the opportunity to ask questions and discuss topics with our trainers and other students. Sessions are available for those seeking to complete their finance broking qualification. We are also running complimentary 3-hour recognition of prior learning classes to assist existing bankers and brokers to gain their qualification more seamlessly. Take the opportunity to upgrade to your diploma starting today. Register your interest via the virtual classroom banner found on our website.
Hi, Aaron Milburn from Pepper Money, here to say a huge thank you to FBAA members. Throughout these really trying times over the last couple of months, we've partnered together to make sure your customers are supported throughout. FBAA members have been critical to the success and growth of Pepper Money across Australia, and I want to say thank you for that and wish you all the very best in 2020 and into 2021 together.
Great, so please ensure to reach out direct to WAMC or Pepper. We're now going to have our panel session, and Peter White will also be emceeing this session. So I'd like to welcome Pete. Hi Pete, welcome. I'd also like to welcome Simon.
Good morning.
Mark from Finstro, Surinder from Trailbook Loans, and Reese from Bluestone. Thank you. Over to you, Pete.
Thanks, Christine. And good morning, Queensland. Thanks very much for joining us on what is our first session of our eSummit for Queensland. The second part of this will be held tomorrow afternoon. So make sure, if you haven't already done so, is register for tomorrow's eSummit as well. And you hear some great speakers there. And additionally, I'll be holding a session on what's happening in the marketplace through regulation, best interest duty, and government. So make sure you register for that. And good morning. Unfortunately, gentlemen, where are the ladies this morning? Bar our host, Christine, of course. Welcome, gents. Trust you're all well.
Morning, Pete.
Good. They're all on notice not to talk over each other, so that's they're all being very good and well behaved. Thank you, gentlemen. All right. What we might do to start with this morning, given you know the kind of markets we've been through of late and the interesting times and challenges they've presented, we understand that markets move and not everything is consistent. Not everything is what it was, say, 6 months ago or 4 months ago. So what I might do firstly is to gain an understanding from each one of you, and I'll nominate who, because I'll run a lap of it, and that way we won't overtalk each other. And just give me, I guess, an understanding of, well, let's deal with who you are, what the company is you're with, and what your key offering is in the marketplace at the moment. And I guess before I throw to someone, I better make a special mention for Cameron Garnham from Strive Financial, who's meant to be on the panel as well this morning. Strive Financial are a leading private lender who's been working with the FBAA for, God, I think it must be 5 years now. And we're very honoured and proud to have Strive with us, because they, in my point of view anyhow, one of the most trusted private lenders in the country. And there's only a few I would use those terms with, and Strive Financial is one of those. And unfortunately, Cameron's wound up in hospital, so he can't be with us. So I'm giving him a little plug along the way. And if you need private money, short-term money, Cameron's the guy to ring from Strive Financial. Hopefully, you'll find his details in the downloadable PDF pack that's attached to this GoToWebinar. All right. So Simon, I'm going to work off my screen. Simon from Prosper, give us a quick snapshot of what you guys are doing at the moment.
Thanks, Pete. So Simon from Prosper. So who Prosper are, we basically lend money to businesses, so SME businesses. We assess their business turnover to work out how much we can lend to them. So these are challenging times for any lender, particularly in the small business space, because obviously small businesses have been affected greatly by a lot of these government restrictions. So what Prosper is doing to assist our small business clients in this time is obviously we're helping out those existing customers with either deferred payments or reduced repayments until they get back on their feet, which we're starting to see a lot of really good signs in the economy. The other thing we're doing is we've developed 2 new products to allow the government-backed loans to be given to these small businesses. So they're currently going through a pretty tight trial at the moment. There's only a select number of brokers that we're trialing those products through. I don't think we're too far away to be able to offer them to the full market. There's obviously a lot of things behind the scenes when you develop products to make sure everything is right, to make sure that by the time a small business actually signs up for funding, that it's all the checks and balances have been done. So Prosper's been pretty upfront in these times about trying to show some leadership into this small business space. And so we're pretty happy that we're rolling out those products, and in conscious of time, and as any BDM and my other panelists will attest to, we could probably waffle on all day. So I'll probably stop talking now to give the others a bit of a chance.
Okay, we'll come back to you for a bit more on some of those things. So Reece from Bluestone, mate, where's Bluestone sitting at the moment? Are they lending? You know, some people have, some people haven't. What's the status with Bluestone there, buddy?
Thanks, Simon. You left me about 10 seconds, mate. But yeah, look, we're still lending. Like a lot of lenders in the market, we did make some changes to our policies, and we made them very early. We were the first lender in the market to make changes to our policy, and immediately after that, we did cop a little bit of heat from brokers. It was early stages in the COVID-19 process, so I think a lot of people were still unaware what was happening in the market. It wasn't until the following week, that a lot of other lenders made the same changes. I think brokers then started to realise that, okay, you know, maybe this is a sign of the time. So we're still lending, albeit restricted at the moment, and that's a conscious decision. Positive signs, though, we are looking to relax our policies in the next, say, 3 to 4 weeks. What those relaxations are, we get to communicate, but watch this. And yeah, give it a few weeks and we'll be aggressive in the market again. So exciting times. I think through the other side of this, there's going to be opportunities for everyone. So I can't wait.
Yeah, no, that's fine. And mate, look, it's one of these things at times. I remember when we went through the GFC and recessions before that, and lending markets move and change, and they're outside of people's controls. And the key thing, I think, for all of us is knowing and understanding what is and what isn't, and they move and they come around to different places. And once whatever the challenge is, and in this case it's coronavirus, in the past was collapse of capital markets around the world with the GFC, things come back to normal. And it's very important that we understand where things are at, and no one can be begrudged for that, because it's very important that we understand what's what. Surinder, how are you going over there in chilly WA? You haven't been drowned as yet?
No, I lost a pergola and a tree and some power, but apart from that, safe and fine.
Yeah, all okay?
Yeah, all good, back to normal now. So yeah, obviously we're funding trail books, financial planners, rent rolls. The biggest change that we've seen in the current environment is we're probably a little bit gun shy on rent rolls at the moment, not really knowing what's going to happen with the deferral of rents and the non-eviction notices come September. So we're a little bit gun shy on rent rolls, still considering them, but everything's got to go to board approval for a rent roll. Financial planners and mortgage brokers still there, still supporting. The acquisition space seems to be heating up a little bit, which is probably not a bad thing. Yeah, apart from that, we're just sort of plodding along.
So play on, still lending against trail books, yeah?
Yep.
Excellent, excellent. So Mark, talk to us about what's happening at Finstro. How's things going there?
Well, since the coronavirus, like many lenders, we've had one change to one of our acceptance criteria, which is term in business, but we're still lending. We're still receiving applications on a regular basis, getting the approvals out. we've had a pretty much from day one, we've had a quite a concerted focus on our existing client base. So we've had a proactive outbound call campaign to make sure that all of our clients are aware that we've got various support packages that were created by the management team very early on, from deferred instalment payments to extended terms, to assist with any sort of cash flow requirements, not just take off the financial pressure, but the emotional pressure that people could suffer thinking that they're, you know, into a corner. We wanted to make sure that they had an element of control and peace of mind at night time. We're still dealing, of course, primarily with brokers. FBA, in fact, we've been with you guys for over 3 years now, and most of our origination, 90% or thereabouts, comes from brokers. So if anyone online is keen to talk to us about a deal, we're still very keen to hear from you and try and support you.
Excellent. And so, Mark, what is your, I guess, sweet spot as far as lending at the moment? I know Finstro has quite a diverse range of products, but bringing it down to what is the actual key product and the key sort of loan size that is working for Finstro in these times at the moment?
Okay, well, historically, I don't think it's really changed that much. Historically, because of the nature of our products being revolving facilities, which has always been the case, up to $100,000 limit with us goes a long way in terms of transactional settlement volume. So simply the cycle of turnover in a small business. Our focus has always been business-to-business transactions. We don't have a enormously heavy weighting in our portfolio with retail businesses. So any trade transactions that occur between businesses, trade finance to buy your supplies from either overseas or domestically, factoring facilities, and cash advances. Cash advances are less common now, I'm finding. Most people are wanting to actually have the trade facilities, and debtor finance is one area that not only allows cash release into the business, but also a moratorium on payments, because there's actually no payments required from our clients until the debtor pays. So I suppose in short, we haven't really changed our position, Pete. You know, we've got that facility up to 100, which is low doc, and you know, transactions business to business.
Yeah. Mate, that's excellent. That's excellent. So, Surinder, for yourself, obviously you were saying before that rent rolls are sort of off the agenda at the moment, although you may review them case by case through your board. What generally then is the market you want to assist, and what are the monies generally used for when you're doing this?
Yeah, so still really focused and keen on mortgage brokers and financial planners. And even on rent rolls, Pete, that's just a time and place until it sorts itself out. Yeah. So we're certainly not out of it. We're just a little more cautious. A lot of what we're seeing at the moment in the mortgage broker and financial planner space is actually starting to heat up around acquisition. So there seems to be, in the planning and broking space, a lot of smaller operators either merging or looking to get out, which is interesting. We're also seeing some pressure on prices going up, funnily enough, even in the current environment, with multiples being paid increasing. And you know, that's the predominant what we've got at the moment and what we're seeing. We're still happy to lend for any business purpose, debt consolidation, ATO debt. We don't really mind what the funds are used for. Obviously, if we are getting a request for a cash flow lend at the moment without a stated purpose, we're going to dig a little bit deeper than we normally would. But apart from that, yeah, that's sort of our sweet spots and where we're sitting.
Well, that sounds all very reasonable, and it's great to see you and your business supporting brokers around the country in the manner which you do. I mean, it's you know, it's quite often challenging times, and a lot of brokers have said to me, well, you know, who's there to help me as a broker? We hear about all these other stimulus packages, which a lot of the government stimulus is for brokers as well, because they're small businesses. But here you are as a specifically tailored, specialised lender supporting brokers. So I think it's absolutely magnificent that you've come through this period fine and you still have the faith and support in our industry to keep backing it. So well done, Trailbook Loans, and thanks, Surinder. So Reece, over to you at Bluestone. Tell us what is that sweet spot, the key sort of product, the key sort of loan sizes that's really working in Bluestone's world at the moment?
Yeah, so our target market at the moment is owner-occ primarily. With the investment space, we're not being aggressive with that at all. And we've got a bit of data to back that up. Unfortunately, just to give a bit of context as to why we've made some changes to our investment lending, 9 of our loans that we settled in March that were investment purchases, those clients are already in hardship because they couldn't find tenants. So we've had to make some changes, and it's not isolated to us, of course. There's other lenders in the market that are still, using rental income at 80%. We've taken a bit more of a cautious approach, so we will relax those measures in, the coming weeks and months. But for now, owner-occ, specifically targeting the self-employed market. So, Bluestone's renowned for our alt-doc lending using bank statements or BAS, so still targeting that. 1 year's tax returns. And we're also doing a lot of debt consolidation still, and lending for both personal and business purposes against residential lending. So that's our target market for the time being. And like I mentioned earlier, in the next, say, 3 to 4 weeks, watch this space. We're going to come back into the market, reduce our rates again back to, where they were, maybe even lower, and but still targeting that owner-occ market. So that's where we're at, Pete.
Sounds like a little bit of sneaky breaking news going on there, mate. Watch this space.
Watch this space, certainly.
Excellent. Oh, we'll look forward to that. So with the owner-occupied stuff and having a flavour towards small businesses, what's the rate comparisons like between Bluestone and, say, banks? And if there's any difference, what's that difference? Is it mainly because of the risk on an SME style loan, or you're prepared to take on extra style of risk that the banks won't? What's the go there?
I think we're sort of a one-stop shop. So we have our prime offering that we released in November last year. We've got our near prime and specialist. So obviously your specialist and near prime loans are a bit more risky, whether it's, a 12-month AVN or there's some impairment there. So the rates are a little bit higher. We conservative through time. You find that when we see our rates in a few weeks, our own offering,
all right, thanks for that. Excellent. So, Simon, over to yourselves at Prosper for your sweet spot, and what are the sort of loan sizes that are working for you? And interesting story though, before we move on to Simon, the FBAA and Prosper had a very interesting period in time early in March when we held the International Women's Day, that we had planned to actually be on Prosper's Sydney rooftop overlooking the city. It was going to be magnificent. And we found out, I think it was about 12 hours, I don't even think it was 24 hours, I think it was about 12 hours beforehand, that Prosper's building was being shut because of a coronavirus outbreak. And all thanks to the wonderful Alex and the team at Prosper, who reorganised a new venue for us. But of course, we became renowned all across Europe with a picture of Alex and the FBAA logo on a sign that was putting up on the building there, shutting the venue down. So I don't know if we heard too much about Australia, but I know it went right across Europe. So it's a pretty interesting period of time you guys have gone through.
Yes. We were pretty early in this whole COVID response. That coronavirus scare was actually on the ground floor of our building. It's occupied by MTV, and it was actually one of their staff members that had a suspected case. So Prosper did, I think, absolutely the right thing, because in this sort of environment, you're better off to be safe than sorry. So yeah, that sounds like Mr. Begurdak at his finest in doing that sort of thing. So yeah, absolutely. That turned out to be a false alarm, by the way. It actually wasn't, but by that stage, all the staff were working from home. So it was pretty much interesting times for us.
certainly fun and games on the day, I can assure you. And I will say a special thank you to Prosper. You guys pulled off a bit of a magic trick for that day, and our International Women's Day was a huge success. And on that, as a segue before I come back to you, all the men out there, get ready for International Men's Day in November of this year. Special event coming up, again with Prosper, International Men's Day. Got to balance these things out, keep the harmony going. So Simon, tell us about Prosper. What's the sweet spot? What's the loan size you're looking at? Is there a specific product that just really rings in the marketplace that people are after?
Yeah, this has the capacity to be a very long-winded answer, so I'll keep it very, very summarised if I can, Pete. So our existing products, they still exist. So we're still lending. We said pretty early in the piece that we're always going to be open for business. So we still had the funding available and we're still lending under our existing product range, albeit with some common sense changes. So if we were going to lend to, say, a cafe that has shut its doors because the government had told them to, then obviously that's a pretty poor risk to take on that cafe. So because there was obviously an air of uncertainty around what was actually going to happen, how long it was going to last for, and if that cafe would have capacity to make any loan repayments. So like any good lender does, we assess the risks, we support where possible. And in Prosper's case, the majority of our loans, and pretty much all of them, sorry, up to about 150,000, we assess using the last few months bank statements. It can be as short as 3 months. Most of them are about 6 months. So if we were to apply those same principles and lend today, we'd be looking at the last 2 months for some of these businesses that would show little or no income. And so it would be a pretty poor benchmark to try and lend based on that data. So what we're doing, very common sense approach, we're looking for longer, particularly under these government backed loans that we're introducing, to see possibly the last 12 months turnover to make a decision about what that business will look like when these restrictions start to lift. So a lot of common sense lending principles are coming into play. And also a very rapidly changing environment. So as more industries start to have lockdowns, restrictions lifted, they will come into customers that we can help or help more than what we have been. So there's probably been never been a better time to keep your BDM in the loop about does this customer or does this scenario actually make sense for you as a lender to support? And that goes not just for Prosper, but for all the other panelists as well. In these times where it would be challenging for the best of brokers to keep up with all the changes underway. Just keep your BDM handy, keep them on speed dial. That's our job to sort of navigate through. So, so sorry, Peter, I told you it was going to be a long-winded response, and I'm trying my best to summarise. But the government response in giving Prosper the guaranteed loans, that's the bit that's super exciting in our space. So essentially, we're saying to these small businesses that we'll give you money, either under a term loan or a line of credit, and you don't have to make any repayments for 6 months. And if you're a business that's struggling, that's nearly more than a lifesaver. That just keeps the doors open, keeps the staff being paid, everyone's happy.
When do you think that's going to come in, Simon?
We're funding at the moment, so we're already processing those loans and we're doing them, but it is a fairly tightly held pilot that we've got. Yep. So the next phase, and we've been doing it in phases, the next phase, I'm not sure of the actual timing, but it wouldn't be too far away based on what we're seeing internally at the moment.
Yeah. I think one of the things that people need to understand with the government stimulus, so this style of lending, is that as the government is guaranteeing 50% of the debt, the lender still has to have the balance sheet capability to lend. It's not like the government saying, here's a check and go for your life sort of thing. So there is very appropriate, there's a balanced and staged approach to these sort of things, especially in these times too. Mate, that's great. Where do you think the SME market's going to go? Forget lending for a moment. Where do you think, how do you see, from what you're seeing, how the SME is going, where do you think that's going to play out? Do you think this is going to drag on forever and a day, or what are your thoughts?
My thoughts is that the way that business is conducted has changed. Certainly some industries have no choice but to go back to the old style of lending because it's inherent in their industries or the way they conduct themselves. But if you look at what we're doing now, this is a change in our business. So we're having this conference call because we can't all sit in a room because of social distancing requirements. So what we've actually seen is some really positive stuff from the small business community in the way that they've pivoted or the way that they've changed their businesses to actually adapt to these new environments. And the exciting things for us is we're taking that on board. So if I come back to probably a poor example, but if I come back to the example of that cafe, because they were closed, we may not have lent to them because they had no turnover, but the same cafe might decide that I'm going to invest heavily into my social media, my marketing, and just do takeaways or takeaway packs or something. And we've seen some really cool stories about how businesses are evolving to counteract these government restrictions. And like any good lender, we're happy to support those businesses that have those new avenues of revenue and let them grow. So yeah, it's a fascinating time in the economy widely. So yeah, I don't think we go back to normal. There's a new normal. What that is, yeah, I don't know. But it's interesting.
Okay. Hey, Surinder, you being, I was going to say, I know this is going to sound a little bit. This is not prep. This is a question off the cuff. You are one of the most intelligent men I've met in this industry, and you have an enormous depth of knowledge and skills and background. So it's not peeing in your pocket. It's just what it is. But mate, what's your view on the broker market and where you see that going? And obviously, yeah, we see from an association point of view, we get people who are leaving the industry only because it was already in their mind, and this is just the thing that pushed them forward. We don't see at the moment, we're not seeing a mass exit. What do you see in what you're doing, and how do you feel the broker market will play out as we go forward in the coming 6 to 12 months as we move out of this period?
Yeah, thanks, Pete. So, in all honesty, after the debacle of last February with Commissioner Hayne, as perverse as it is, the current period's probably never shown how incorrect he was in his findings and, you know, the broker proposition. Because if Hayne had have got his wish in February 2019, can you just imagine the consumer and business world now having to pay to access brokers to actually help them stay afloat, let alone stay on track? So I know I did a good year of beating up certain commissioners. I'll take a step back from that now. I honestly think moving forward that the broker proposition only grows and grows and grows. I honestly can see 70, 80% market share for mortgage brokers, because again, this whole period has shown the absolute value proposition that a mortgage broker has. And I think to a degree as well, for a lot of the brokers out there, we all said that we did certain things for our clients and we acted in certain ways for our clients, and we did that effectively. But all of a sudden, when you've got an avalanche of clients where your job is to actually just help them, you've got no other option. It brought out the best in the broking industry, which, you know, is testament to the industry. The other thing I think as well, Pete, is a lot more brokers will start to diversify into commercial lending, and from that 10 or 15% market share in the corporate and SME space that brokers currently have, I see that really rapidly expanding to 50% as we come through this.
Mate, I actually couldn't agree with you more. And that 70 to 80% market share, I think, is very much a real deal as we go forward, especially once we get into 1 January and the back end of this year, where the legislation around a best interest duty will actually then play out. You know, a lot of people are sort of, well, some people are concerned about it, others are sort of taking this stride. But to me, it's the world's greatest sales pitch. You know, if I was a broker, I'd be out there saying, well, I've always acted in your best interest, and through the COVID-19 period, we proved that, as you just said. But the reality is, although there's now a piece of law around us that ensures that we put your interests first, your bank can't say that. We as a broker have to. We do anyhow, but we've got this law now as well. But your bank doesn't have to. So why would you go to a bank who doesn't act in your best interest or has no obligation to act in your best interest, where the broker, me, I do? And I think it's the greatest sales pitch on the planet coming forward for brokers in the marketplace, which to me is one of those drivers to that 70, 80% market share. I think there's some very exciting times coming forward as we go forward. Thanks for that, Surinder. I appreciate your insights and thoughts there. And these are personal opinions, by the way, folks. These are not necessarily a business industry opinion as such. So I am asking for personal opinions. So Reece, you touched on a little bit before about investment markets. How do you see the property market? I know you're not a property expert, but in the lending sphere, you get a feel for what's happening in the property markets. What do you see happening there? One of the common questions I get asked is, is there going to be a major drop in property values, and how will that impact things? And I think there's a bit of a toss of the coin on some of this, and a lot of it's dependent on how long we stay in this environment. As to the quicker we come out of it, the less impact there'll be on property. But well, you got any thoughts around that, Reece, what you're seeing there and what your feel is? Say, let's talk about the owner-occupied market. Because obviously, you guys are sort of put the investment side into a little bit of a hiatus just for the moment.
We're on call every morning with our boss, and he gives us updates on the market. So it's quite interesting. He said that Queensland's travelling actually not too bad in the property market. It hasn't moved a great deal when we talk in comparison to New South Wales and Victoria. Obviously, that's great, and would love to keep lending investment purchases, that sort of stuff in Queensland. But obviously we lend nationwide, so it's not as easy as free pick. So for the short term, yeah, definitely. We've already seen that there's impact there. But I think long term, and with all the government changes and the phases as they roll out, confidence is coming back quite quickly. So short term pain, long term gain, I think, we're going to get back to what we are today fairly quickly. Personal opinion. But look, there's definitely not as doom and gloom as everyone thought it might be, 6 weeks ago.
Okay, great. And Mark, I'll throw to you. I'm getting the wind-up signal here, so I'll have to start and narrow things in a bit. But Mark, you're talking about the invoice and factoring side of the business is quite prevalent. There's no need for repayments because it's paid when the debtors actually pay their invoices and so on. What's your view on the SME marketplace and what's happening with those people who are needing that style of invoicing or factoring style facility? Where do you see that marketplace going at the moment? How's it travelling?
I think there's a greater level of inquiry for that. That's just purely in terms of the small business opportunity for taking a bit of financial pressure off. That's, as I mentioned earlier, equal to, if not possibly better than, a deferred instalment arrangement. So I see perhaps that gaining a little bit more momentum and leverage over the coming months. I find in the portfolio that I've looked after, a few hundred clients in conversation, the sentiment in the first couple of weeks was not strong. There was a lot of emotional impact on people. I think progressively, though, as this has sort of moved forward in time, a lot of those businesses, I certainly wouldn't say they've come back to normal, but the position is strengthening, and the emotional stability of our clients is also strengthening, probably partly because of the support that lenders like us and Prosper and so forth can provide clients for that peace of mind, as I said, for the family at night, but also learning to deal with this. And as Simon mentioned, I've seen some of our clients pivot as quickly as what we're all pivoting in technology to move from a retail store opportunity and then putting a lot of focus into a internet, web, social marketing campaign, and seeing their revenues come back very strongly. The level of discretionary spending is only now 3% lower than pre-coronavirus, and that'll be an interesting thing to see how much of that application of spending is going to change once the deferred instalments are over. But that's probably more on the consumer side than the business side. So it's quite varied with businesses depending on who they are, how they trade, but I see a lot of strengthening of position with people emotionally and as their business adjusts to this climate. So I think it's a very positive position that will continue to grow over the next 6 to 9 months.
Excellent. I'll just turn my mic off mute. Sorry, it always happens. Your phone rings in the middle of something. I got the phone, but then it rang on my iPad. Everything at once. There you go. Look, there you have it, folks. I thank our panelists very much for all that they've contributed. Mark from Finstro, Surinder from Travel Loans, Reece from Bluestone, and Simon from Prosper. Gentlemen, thank you very much for your insights and your knowledge and sharing us a little bit as to where things are at in the marketplace. So thanks very much. I really appreciated time with you this morning. Have a good week, guys. And with that, with that, I will hand back to Christine. And Christine, thanks. And folks, don't remember to tune into the second part of this electronic summit tomorrow afternoon. Thanks, Chris, and have a great one. Thanks for having us on this morning.
Great, thank you, Peter, and thanks for hosting the panel session. And again, big thanks to our sponsors. So please, or our lender sponsors, please ensure to reach out to them direct. We're now going to hear from Insurance Advisor Net and how they can assist you.
Hello everyone, this is Darren Lodes from Insurance Advisor Net. Just touching base with you all. I hope you're all keeping well through these crazy times that we're all going through. Just a quick grab, the one bit of advice I'd give you in the time that I've got is for those that have got their policies due this month, and I know there's quite a lot of you, maybe this year's the year to take advantage of our premium funding option where you can space the payments out over 10 months rather than an upfront payment, just to help you cash flow through these times. Any other problems at all, you guys know where to get us, and we're here to help you where we can. Stay well, and we'll get through this together. Cheers.
Great, and thanks to Insurance Advisor Net. Please ensure to reach out. It's now my pleasure to welcome our National Wellness sponsor, Renee Bletham, from Partnership Manager of Suncorp. Welcome, Renee. And Renee will be talking through 5 ways to build resilience in the time of change.
Good morning, everyone, and thanks so much for having us. We're really pleased to sponsor events like this, and I'd like to congratulate you all on making the time to attend because, as you'll see through our presentation, connecting is a really important part of building resiliency. So it's great to bring the community together today, and I thought that was an excellent panel session this morning, and I'll be using some of the things that the guys referenced. So as Christine mentioned, I work for Suncorp, and we're a really proud partner of the FBAA, and our focus is around supporting wellness when it comes to helping you as a broker and also as a person, but also how do you support your customers when it comes to wellness. And we're not actually a wellness expert, but what we've got for you today is a summary of the financial assistance packages that we have for your Suncorp customers. But we're also sharing with you some insights around building resiliency, which is a way to manage stress that's part of our employee assistance program. And we were hoping that through the couple of tips that we have to share with you, it might just give you something different to help you manage all of the amount of change that we're experiencing. As you heard the panel talk about, there's change now and there's further changes to come. So what we're going to do is just take you through the bit of background and bit of understanding around resiliency, and then some helpful tips, and we've got an information sheet to send you as well. So the first thing we just want to quickly cover is vulnerable customers. Now, I know a lot of you experienced an awareness about this when the Banking Code of Practice was implemented July last year, and we participated in the Are You OK events where we talked through this slide. And the interesting thing is that, and not interesting certainly from a positive perspective, but the environment that a lot of Australians have found themselves in now due to COVID has made them actually be in that moment of experiencing financial vulnerability. And some of the statistics around the fact that 30% of adults prior to COVID don't have savings, 45% of people will experience a diagnosable mental illness in their lifetime, 25% of people experience anxiety when dealing with financial services, and 25% of people can't or sometimes don't pay their bills. Now, if that was the state of the community before COVID, can you imagine what people are experiencing now? And I know that some of you would be helping your customers through this, but it's a peak stress time for everybody. And even if you're okay, the people in your immediate world are probably not, and they're probably experiencing something which is having an impact. And what we wanted to help you with today was some tips around how to better manage that stress response so that you can actually support yourself, but also support your family members and your customers. So the information that we wanted to share with you is based on some research that has been performed around what are some of the attributes that people who have a high level of resiliency, what are the skills and learned behaviour that they've actually brought into their life. And it's broken into 6 what we call domains. And those domains are vision, composure, reason, health, tenacity, and collaboration. Now, the reason that we're talking about resiliency is it's the ability to positively respond to adversity. It's the process of adapting well in the face of adversity, trauma, tragedy, threats, or even significant sources of stress. And I think we'd all agree that we're all coping with very changed environment, which can lead to a higher level of stress. But what resiliency does is it helps us bounce back from setbacks. And because it's learned behaviour, what we wanted to do was take you through some understanding of it so that you could then either help those people around you or help yourself, because investing in learning and building this skill, it can increase your overall well-being and psychological health, it can reduce the impact of stress, and it can improve your overall performance in life and increase your job satisfaction. So if we just break down each of these categories, vision is about purpose, goals, and being aligned in the actions that you take with what means the most to you. So having a sense of purpose and the ability to set goals and prioritise the right actions whilst you're in the face of adversity. Being clear and identifying your personal values and setting goals that are aligned to these are a great way to develop in this area. Composure. So composure is the ability to regulate our emotions and stay calm. One of the best ways that you can build skills to regulate your emotions and build awareness is practicing everyday mindfulness activities. And we've got some great tips for you that we're going to share post this session, and 2 other things that we're going to take you through quickly. Reasoning. So reasoning is the ability to solve problems, think critically, identify opportunities, and instigate change. One of the great things that you can do to harness this is look at the questions that you actually ask yourself. The way the brain works can only actually answer one question at one time, and it'll focus on the question that you give it. And I know that if I try and reword a question when I'm faced with something that feels a bit overwhelming, and one of the great questions that I heard last year from Tim Ferriss was, what would easy look like in solving a problem? And even just posing that question, because it changes then the way that you're actually looking at it, it can actually change the state that you're in. We'll move on to health. So health is made up of nutrition, sleep, and exercise. I'm sure you all know that exercising frequently, getting good sleep, and health and nutrition, they're all the basics. But working in this COVID environment, it's interesting how working from home has actually made a lot of people, in the conversations that I've been having, you're sitting still for a really long period of time. And what that does is it stagnates energy, and it actually reduces your hydration in your body, and it can impact the clarity of thought. So one of the great things that you can do to help yourself here is just set a timer on your phone, and every hour just get up, walk around for 5 minutes, grab a glass of water, and that will absolutely help you cope with the day a bit better, because it will stimulate your energy through your body, but also your thinking. We'll move on to tenacity, and tenacity is about persistence, really realistic optimism, and being able to bounce back. So it's the ability to persevere through challenge and quickly get back on track. I've just to share an example here, and it's about that reframing. I think with the enormity of this COVID environment and not having so much uncertainty, you've heard the panel talk about the changes that are coming now and how businesses have had to adapt and pivot, and setting short-term goals would really help that process. So what can you do in the next 30 days based on the policies that you know with lenders to help your customers as it is? That could be a way to just actually structure your time, because past 30 days, who knows what those policies might actually look like. And the last one's collaboration. So support networks, social context and connection, and managing perceptions. So fostering connections with others and creating a collaborative environment. And again, I'd like to congratulate you on making the time to not only attend today to get an update from the lenders, but to connect with your community, because that's a way to stay in touch, and you've actually invested in yourself and your health and well-being by doing that today. So based on using that framework, we've got 5 tips for you to help build your resiliency through times of change. And these are things that you can actually have a go at today. And the first one is to identify what's in your control and what's not. If you've ever heard of the research about having a growth mindset versus a fixed mindset, adopting a growth mindset is a great way to be able to tackle your day. Find what work focuses on your strengths. And I know that a lot of you are so passionate about the help that you can actually provide to your customers. So you're probably already very clear on why you do what you do. And this environment is a great opportunity, like Surinder mentioned, to really be able to show the strength of the broker proposition to the community of Australia. Practice mindfulness, and as I said, we've got some tips on that. And taking some time out to reflect. Give yourself a breather, even if it's just taking 5 deep breaths. That can be enough to just reset and lower that stress response. This is a technique that we wanted to leave you with, and we will be sharing the pack. This is something you can actually implement, and it's one mindfulness technique, and it's based on an acronym called that's STOP, and STOP stands for S is for stop, T is for take a breath, O is for observe, and P is proceed. And the steps are stop what you're doing and just pause. Take a breath. Reconnecting with your breath will anchor you back in the present moment. And I know that sometimes when things are going wrong, you can tend to project what may or may not happen, but connecting with your breath will bring you back to be able to then decide and get some clarity on thought on what's the best way forward. Observe is about noticing what's happening inside and out of you. Where's your mind gone? What are you feeling? What are you doing? So just take a moment and come back, and then proceed. Continue what you're doing or don't. So use the quick information that you've gained from the earlier steps just to do a check-in and potentially change course. The recommendation for this technique is whatever you do it mindfully and in presence and within your body and mind. These are the tips that we're going to share with you. So we've got a list of podcasts that are all based around resiliency, some wellbeing apps, and also some additional TED Talks where these are just the top ones that I've found a lot of help from. They're not a Suncorp branded thing. These are just some tools and resources that are freely available that support the conversation that we've had with you today. And just to finish up, similar to what you heard from the other lenders, we are committed to doing what we can to help you help your customers. So we have a range of relief packages available, and our team are available to help you with whatever it is that you need to support your customers. So before finishing up, I just wanted to say thank you very much for making the time. I hope there was some tips there that may have helped you with your day, and we will be sharing this pack following today. And thanks very much to the FBAA for having us as part of the event today. I'll hand back to Chris.
Great, thank you so much, Renee. And you know, mental health and wellness is so critical for us all right now. So again, thank you very much. We'll now hear from OnDeck and how they can assist you.
Business owners. They're anti-corporate, pro-go for it, never stand still people. They're the always on, the ever enterprising, taking on every challenge, but they're not on their own. At OnDeck, we help fuel their ideas with a whole new way of lending that focuses only on your business. We say no to judgment, yes to facts, no to slow, because we're for fast. When the little things matter, we see the big picture, so you never miss an opportunity. Whatever your business, now you can get on with it. OnDeck, the small business loan specialist.
Big thanks to OnDeck, so please ensure to reach out. I'd now like to welcome Danelle Brooks, Head of Third Party for Lend, and Danelle will be talking around alternative lending during COVID-19. Thank you, Danelle. Welcome.
Thanks, Chris. Excellent. Thanks, Christine. It's very nice to be presenting in my home state this morning. Not that any of us are really travelling anywhere, but it's certainly nice to talk to our Queensland brokers. So welcome and thank you for giving up your time today. So what I really wanted to have a chat to you guys today, and it's really been, everyone's touched on it today from Peter to Reese, Simon, and even Ando at Finstro, is that things are definitely changing in our market. So today the Lend platform is the fastest and most sophisticated platform for Australian business finance brokers, and the platform automates the process of matching a lender to a SME. So it uses a combination of really sophisticated AI and analytics, and it does all this without blemishing the applicant's credit score. So it's intelligent enough to determine whether a customer can actually service the loan that they want. So SME lending and why alternate lenders? Now, we know that COVID-19 has certainly put a lot of pressure on our Australian businesses. And what we sometimes forget is that our broker network is also one of those SMEs. So what we need to do at the moment is really make sure that we're aware of all the opportunities that are available to you as a broker. And some of the standard products that have always been, I guess, the norm, and I guess in the unsecured space, has really changed. You look at this time of year, has your client, got a debtor's ledger that they can lend against? Is there invoice? Have they got equity in equipment? Have they got, trade finance that they need to sort? So there's really a lot of other options for businesses at the moment, and we're actually starting to see a much bigger spread across the product types in the industry. Why businesses use the alternate commercial lending market? So why take your client to a Prosper or a Get Capital or an OnDeck or a Finstro? There's lots of reasons. The financials are not up to date of your client. There's ATO debt, speed of funding, the flexibility of payments, term flexibility, multi-loan purposes, which sort of really talks to product combinations as well. So needing equipment and some unsecured cash flow. And obviously the one we all know about is credit impairment. So we have a look at the way that Mainstream will assess a client. And what we see is that in the alternate space, lenders are much more open to having a look at what's inside the credit file. Is it only one default from 3 years ago from a Telstra or from a utility company versus is it a current $20,000 supplier unpaid default? So alternate lenders are really looking at what's inside the credit file as opposed to just a score. 4 quick tips for you guys to enter into the alternate commercial lending market. So for resi and commercial property brokers, you guys are writing loans all the time for people that are self-employed, or you're writing a commercial mortgage deal. Email them, SMS them, let them know that you've got other commercial loan products that can actually help them. Tap into other professional alliances. Now, for some of you, you may be already doing that, but certainly at Lend, we're seeing a lot of brokers sign up accountants, lawyers, finance, insurance brokers. So there's a lot of other option out there for you at the moment as well. And there's a nice typo on the accountants there. So sorry, everyone, I'm sure someone will pick that up. A dedicated landing page on your website to attract business loan inquiries. Now, a lot of the lenders on our panel will do this for you, but also we do it for you too at Lend, which gives you an access to the whole panel through one dedicated landing page. LinkedIn and social posting. We've all been doing it more than we ever have done before, but you need to let your network know that you're now offering commercial finance. So we have a look at the COVID-19 industry and panel update. And as Simon touched on before, there's a lot of lenders out there who have been approved for the guarantee scheme and are trying to understand where they may sit, where the product may sit. We know that we have Get Capital at market, we have Prosper in a pilot at the moment. So certainly lenders on our panel are doing everything they can to provide the right financing options for your clients. At Lend, with the panel as big as we have, it's really important for us to be on top of every change to industry, to trading length. So as Simon mentioned, definitely keep in contacts with your BDM, but be safe and secure and know that Lend have got you back, and we're only supplying and showing lenders to you that will actually consider your client's application. So we know we've got some industry restrictions. There's three main ways that we look at it to help determine how your client's industry will impact the approval and application process. So gold, industries that have continued to trade strongly during lockdown. So as Simon mentioned before, Prosper is certainly in a pilot with their guarantee scheme, but if your business is unaffected or very slightly affected from COVID, all the standard loan products are out there. So they're your gold customers. Silver, maybe industries that have continued to trade but in a limited capacity with expectation to return to pre-COVID-19 trading. So they're your cafes, your hotels, your pubs, your restaurants, etc. And bronze. So we know that these changes are happening now, but the impact on their cash flow will still take some time. So bronze industries are those that have been fully impacted with lockdowns. So no trade. So in Queensland, over the last 2 weeks, I know that there's been plenty of fresh sets of nails out there and some nice sharp looking eyebrows. So we know that industries are reopening, but it is going to take some time to really build that cash flow. So as you can see at the moment, the SME Guarantee approved lenders are Get Capital, Prosper, Moola, Lumi, Banjo, Speedy Finance and OnDeck. All of these lenders are available to you on our panel. So guys, let's take the guesswork out. I'm really wary of time. So why partner with the Lend platform? It's a single application facility. So one application form, including bank statement collection. Instant analysis assesses the probability of the loan, and the best lender match presents the most suitable lender. Choose which lender you want to send the application to, or let the system do the heavy work. If a lender is unable to help, you can send it to the next lender without logging in to another platform, to another portal, filling in another application form. So real-time status updates from all lenders, which enables a lot better client communication, end-to-end deal flow. So including notifications for complete control and transparency. We also offer serviceability calculators and simple to use CRM tools such as two-way SMS, tasks, and we're just about to launch our email marketing tool. We also have a full Illion service that you can use as well, which will give you the full bank statement analysis, and the process does not impact the client's credit file. We pay your commission the same day that your deal settles. So we pay you 100% of the commission, and I'm always asked this on any webinar, so I will address it now. We pass 100% commission on to you, and the way that Lend make their money is through overrides, maths, VBIs, whatever terminology you may be aware of. The magic of the Lend score, as brokers, you get this for free. So we have a look at the things that really matter to lenders. So we look at the true revenue, so not just the credits. We strip out loans, directors' loans, returns, all of the things that aren't true income. Then we have a look by analysing the bank statements at the serviceability of the loan. And then we actually look at the general statements themselves. So how often are they in their overdraft? How often are they have a negative balance? What's their day end balance? And the score ranges from 0 to 100. And the higher the score, the higher probability the business will succeed in borrowing money, and also at the best rate possible. So there are certainly clients out there who are funded with a Lend score of 30, but you will find that their risk pricing will definitely increase. So Lend size is where you don't need to use the bank statement piece. So you know that for most lenders, they're looking at how long have you been trading, what industry are you in, what is the loan amount that you want to borrow against your monthly turnover. And with those 4 main pieces of information, we can still give you the magic of lend size. So through some demos I've been doing recently with brokers, and I definitely welcome you to reach out so I can do a one-on-one session with you and take you through the platform. We actually show this live. So simply by changing either the industry or by changing the length of trade, sometimes even by notifying the system that your client is a homeowner in the background as well, the result will change, and dramatically. So again, I really urge anyone who wants to have a look inside the platform. It is 100% free. So there is no cost for the two-way SMS, there is no cost to use Illion, and there is no subscription model to the platform. So I'm just going to quickly flick through these so that we do finish on time. So this is a bit of a look at your dashboard view where you can view your leads by stage, tasks, you can view lender profiles, and look at your key metrics. This is just a quick snapshot of your settled deals and what they may look like inside the system. Lender selection. So obviously we have this lender selection as well. So this is where you can control the process. So you have the full option, spot and refer, hands off, or manage the deal all the way through. This is what an individual lead may look like with the lend score attached. So not only do we look at, say, for instance, deposits, but we look at those unique sources of deposits because we know that speaks to concentration risk. Also, you've got your CRM tools that you can view here on the far right-hand side. And so, guys, to finish up, here's a look at briefly what the lender profile may look like. So this will show you the list of clients. You can click on the profile and you can actually see the information. Then that's it for me. So I really wanted to wind up those last couple of minutes because I'm definitely wary of time. So again, thank you so very much for taking the time to jump on today, to listen to, you know, some of the leaders in our industry, whether it's insurance, lending, technology platforms that you can use. And again, thank you so much to the FBAA for being able to make sure that we can still communicate with our brokers in a great format. So thanks so much for your time, and have a great Tuesday, everyone.
Great, thanks Danelle, and great use of technology and innovation. So please ensure to reach out to Danelle. We're now going to hear from Credit Fix Solutions and how they can assist you.
Hi, and lovely to be here to introduce Credit Fix Solutions and Credit Fix Lawyers. If you have clients who are currently suffering from financial hardship or maybe need to apply for deferral of loans, please feel free to contact our team and our BDMs will be there to present to you today. Our email address is info@creditfixsolutions.com.au and our national scenarios helpline is 1300 436569. Take care and stay safe.
And thank you to Credit Fix Solutions, so please ensure to contact them direct. Well, that brings us to the close of Series 1 here at our eSummit in Queensland. But before I close, firstly, I'd like to again thank all of our sponsors for participating today and for continuing to support the FBAA. Just a reminder again that you will receive an email from us in regards to a code for 1 CPD point, but there's also going to be a feedback survey, so I encourage you all please to complete. We really appreciate your feedback. Now, tomorrow we are hosting Series 2 at between the hours of 2 to 3 p.m. So to register, just head to our website. And also we have, if you miss any of our webinars, you can also go and have a look via our own YouTube link. So for everyone, have a fantastic day, stay safe,